Hello everyone, in this video we are going to start with a problem on profit per incorporation. We have already discussed and solved basic problems in this topic, isn't it? So in this question here we have few adjustments relating to certain expenses. So how we are going to solve it, how we are going to analyze the expenses which are different in pre-incorporation period and post-incorporation period. So here is the question. The question is, Shankar Private Limited Company took over the business of Shankar on 4th April 2015. It was incorporated on 1st July 2015. The profit and loss account of the Shankar Private Limited as on 31st March 2016 was as follows. So here the first two lines, as usual, it is full related to time ratio information. The company was incorporated on 1st July and 1st April to June pre-incorporation period, and July to March is a post-incorporation period. So we are going to analyze the number of months. We are going to take the number of months. We are going to identify the time ratio there. So next one, they have given P&L account. In this P&L account we have certain expenditures and certain incomes, isn't it? So commission full and full related to sales ratio, advertising sales ratio, I'll just write yes. Next, MD's remuneration. So MD's remuneration is full and full related to actual post incorporation. Okay, so depreciation time ratio, salaries time ratio, insurance is also time ratio, preliminary expenses are written off. So preliminary expenses and interest on vendors capital, or MD remuneration, directors remuneration, audit fees, those concepts always related to actual post. So I have just written A. Rent and rates is related to time ratio. Discount, so when we have discount on debit side, discount which is allowed, which is full and full related to sales. Bad debts actually related to time ratio, see, but the ratios also will depends upon the adjustments we have in the questions. We can't fix the things, okay? So depends upon the adjustment in the questions. Might be for few expenses ratios will differ. I'll let you know those concepts in this video, okay? So gross profit, first gross profit only we are going to take in our as for format. We are going to take gross profit and bifurcate on the basis of sales. Next, bad debts realized. So bad debts realized is also based on sales, but let us read the adjustment and we will confirm that. The average monthly sales after incorporation was twice the average monthly sales before. So here we have adjustment related to sales ratio. So they have not given the sales ratio, sales value they have not given, isn't it? In previous problem they will only clearly mention pre-incorporation sales value and post-incorporation sales value, but in this question they randomly told that twice the average monthly sales before. So we'll solve that. Rent which was paid for the first 3 months was 200. We have rent, rates and taxes, isn't it? So this one we have an adjustment. So first 3 months was 200, then increased by 50. So how we are going to check the how we are going to bifurcate the increment values and all we are going to see. Next, bad debts realized. Yes, bad debts we have adjustment in the bad debts, got it? So 350 related to for the period after 1/9/2015. The balance is related to the sales made up 1/9/2015. I think this is 1/7. There is a mistake in the question. So for the, I'll just read it. Wait. Yes. Bad debts of 350 related only to the period of 19. No mistakes. Yeah. Here what they have given, total bad debts is 1250. In that 1250, 350 is full and full related to which period? After September, which means post incorporation period, isn't it? The balance related to the sales made up 1/9/2015. So they have given certain adjustments here. While calculating the working notes, I'll explain you in detail. Got it? So this is the question here. So now what we are going to show, last one, I think I missed this. The bad debts realized, this one, belong to the bad debts which were written off in 2014 and 15. So which means it is fully related to pre-incorporation. You are getting my point? We are in the accounting period of 2015-16. According to this question I am telling, not I am saying current financial year. Got it? So according to this question, Shankar Limited was in the financial year of 2015 and 16, but bad debts realized was belonged to 2014 and 15. So it is full and full related to pre-incorporation. This expenses, okay? Sorry, this income. Got it? So first what we supposed to do means we are going to solve all these adjustments over here. Okay, so I'll calculate here only. Working note. So if we are very clear with all the adjustments and working notes, means we can easily solve the further questions. Okay, so first one, calculation of time ratio. Even though the time ratio is very clear, we have to work out the time ratio, because every small thing includes max. Got it? So how we are going to calculate? As usual, pre-incorporation period is to post-incorporation period. Yes, so as usual it starts from 1/4/2015, ends in 31st March 2016, isn't it? So here what they have given in the question, they have mentioned the company was, just a second, incorporated on 1st July, isn't it? So incorporated on 1st July 2015. So one day earlier we have to write here 2015. So April to June we have 3 months, and July to March we have 9 months. In 1 year we have 12 months, isn't it? 3 ones are 3 threes are. So time ratio is 1:3. Got it? Okay. Next point, calculation of sales ratio. So for sales ratio, they have not clearly mentioned anything, so I'm going to assume certain things. I'll let you know here only. Average monthly sales of after incorporation means post incorporation was twice the average monthly sales before, which means post incorporation sales, I'll just post sales is twice means double the pre incorporation. So I'm going to assume, so I'll just write an assumption. Sometimes we have to take certain assumptions, but not always. Okay, assumption is, so we are going to consider pre incorporation sales as 1, not whole, monthly sales, pre incorporation monthly sales as 1, because they have mentioned monthly only in the question, average monthly sales, so we have to take the monthly sales only. Okay, next, post incorporation, let me write average also in order to avoid the confusions. Average monthly sales as 2. Got it? You understood this point, right? So in question they have given this, so twice means pre incorporation average monthly sales will be 1. That is the concept. Now what I'm going to know means they have given monthly sales, so I'm going to convert the monthly sales into pre incorporation sales and post incorporation sales. Got it? So pre incorporation sales, post incorporation sales. So how it going to work? So how much value I'm having in pre incorporation, I'm going to consider my monthly sales as 1. So how many months I'm having in pre incorporation? In time ratio we have calculated 3 months, isn't it? So 3 months is to post incorporation sales is 2 into 9 months, isn't it? So this is how we will be calculating it. So 3 value will be 3 is to 18, that is 3 ones are and 3 6 are. So how much sales ratio we got? 1 is to 6. Understood? Very easy, very simple. Don't get any confusions over here. Got it? Yes, I'll next move on to third point, third adjustment in the question. First adjustment I have completed, average monthly sales. Next B point I'm having now, rent which was paid for first 3 months 200 per month, increased by 50 per month for the balance of the period. So clearly they have mentioned. So I'll write here calculation of rent. So how I'm going to calculate? So what they have given in rent value for 3 months means, which is how many months we are having in pre incorporation? 3 months, isn't it? Here we have calculated, no? So in question itself they have given pre incorporation rent, that is 3 months rent is to remaining nothing but post incorporation rent, that is 9 months. Right, months. Okay, so what they have given in the question, for 3 months how much we are going to pay, 200 is to how much they have increased, rent was 200 plus 50, total 250 for the remaining months. First I'll write months. For 9 months how much I'm going to pay, 250. Understood, right? 250 here. Okay, so 3 into 200 will be 600 is to 2250. Got it? You understood? Yes, but if you add both values means you will be getting only 2850. Got it? So, but check in the question, the rent value is how much, 3000. How much we are having here, 2850, which means 3000 minus 2850 rent and rate. Right, in question they have given that only, no? So remaining is 150. This 150 value is related to taxes, rent and taxes they have given, no? So this 150 is related to tax. Got it? So now tax value is going to be bifurcate between the pre-incorporation and post-incorporation. Each and every point you have to observe. See, when we are going to identify the rent value, when they have given, or for example, if you have an adjustment in rent means, in working note itself we are going to calculate the value. There we are not going to apply the ratios formula over there. Got it? So here itself I have calculated the pre-incorporation rent value and post-incorporation. Directly I am going to write this value in my table, but while doing that just cross verify the total ones. Sometimes it may vary. See, in this question itself it is varying because in question rent and taxes they have given 3000, rent value is 2850, remaining 150 is related to my tax. Got it? So we are going to bifurcate this in the basis of time ratio, isn't it? So obviously once in an year only we are going to pay tax, no? That's why we are going to bifurcate on the time ratio. So 150 into 1 by 4, we are having time ratio as how much we had 1:3, isn't it? So 150 into 1:3. Got it? Okay, so for pre-incorporation it will be valued at 37.5, so I'll convert it into 38, and for post incorporation $50, use calculators. Okay, so it will be 112. Got it? So very simple, easy. So we almost completed the 2 adjustments, and this one is already I have solved, and this one is also completed, and here also we completed. Now we have bad debts. So bad debts is also very simple. Please clearly read the statement and separate the statements. Take first few lines and break and read the remaining. First solve the first part and solve that part, and then move on to the other one. So whenever you are having a lengthy adjustments and very paragraph kind of adjustments, when they have given no, that time we have to read a single part and solve it, and next we have to move on to another. We can't read all the adjustment at a time. We can't understand everything in one part. So how we are going to understand? In that way, you please analyze it. Okay. So bad debts for rupees 350 related to only to the period of 1/9/2015, which means it is after incorporation, isn't it? So after incorporation means what we supposed to do? This 350 is fully related to the post incorporations. So I'll write here that first. Yes. Fourth one, calculation of bad debts value. Got it? So the total value I'll write here. The total value of bad debts is 1250. Okay. Just instead of writing here, I'll write here. Total bad debt is 1250. So we can mention it as bad debts related to related to 1/9/2015, which is, I'll use different color, which is full and full related to post incorporation. Got it? Yes, that is 350. So I'm going to deduct this from total. Why I'm deducting? In order to identify the remaining values ratio. Got it? So 900. Yes, this one is full and full related to post incorporation. If 350 is full and full related to post incorporation, means how we are going to identify the 900's value, how we are going to distribute the value between pre-incorporation and post incorporation. That is how we are going to identify that. Got it? So but there is also a certain twist in the question. Yes, or how I have to mention it means, so here what date they have given? 1/9/2015, isn't it? So this 900 is related to pre and post incorporation. So pre incorporation, how many months we are having? 3 months, isn't it? And here in question, just first part of the question I have completed, isn't it? So till here I have done, and the balance, read the question, and the balance related to the sales made up 1/9/2015. What they are mentioning here, whatever remaining is value we are having in the question, no, this one is related up to 30th August 2015 they have mentioned, which means 350 is fully related to post incorporation, but this 900 is not fully related to pre incorporation and not fully related to post incorporation. I'll write here now. So post incorporation value will be, so only for 2 months I am going to identify the ratio. Why means, because in question itself up to 1/9/2015 they have mentioned, which means from incorporation we had on 1st July, isn't it? So 1st July to 31st, sorry, August only I have to calculate, which means September 1st itself it is going to end, isn't it? So we can't directly use the sales ratio here. Why we can't use the sales ratio? Because sales ratio we are going to calculate it on the assumption basis, as well as there is no exact thing. When a question or the adjustment is fully related to 1 year means we can use ratios. You are getting my point? If a question or if the adjustment is not related to 1 whole year means we are going to revise the ratio calculations again. We can't blindly take, yes, bad debts is related to sales, so I am going to apply sales ratio to this 900 means your answer will be wrong. Why? Because it is up to 2 months of the calculations. It is not for the whole year, isn't it? So at this particular point of time we are going to revise the sales ratio. How we are going to revise it? The same manner how we have calculated earlier. In that way only we are going to identify it. Yes. So I'll write here calculation of bad debt value. Right, yes, bad debt value, okay, by using revised sales ratio. Got it? So how I am going to identify that? First one, pre-incorporation sales. How much we have identified as? We have identified our sales value as 1, isn't it? Assumptions I have taken, no, that one, into how many months we are having here? We are having 3, so this is 3 is the value. Next, for post incorporation, sales, how much sales, average monthly sales we have identified there. We identified 2 as the average monthly sales, isn't it? Next, how many months we are having? We are having 2 months in the post incorporation as per bad debts adjustments, isn't it? So into 2, so how much? 4. So what is the revised sales ratio? 3:4. So we are going to apply this to this 900. Got it? So if you calculate 900 into 3:4 means 900 into 3/7. If you calculate 900 into 3/7 means you will be getting around 386 as the value. So for pre-incorporation value will be 386, and this is related to pre-incorporation. If you calculate 900 into 4/7 6 means, sorry, 4 by 7 means the value will be 514. Got it? If you want to cross verify, you can verify by adding these both values. You will be getting 900. But wait for a moment. So we have one more question, one more thing here. This 350 is fully related to post incorporations. So obviously we have to add this 350 to 514, isn't it? So final bad debts value will be 386 is to 864. If you add this value, answer will be 1250. What they have given in the question, that will be the value here. So here it is the solution for all adjustment, not full solutions. Around already the video is a half an hour more, isn't it? So why I'm giving detailed explanation for working note means this is the basic for your solution. If you have missed this means your entire solution will get spoiled. It will be no use, isn't it? You will get marks only for the adjustments and the basic easy questions. So that's why. So next maximum by 5 to 6 minutes we'll be finishing this solution, because all the adjustments we have read, we have solved the adjustments, isn't it? So we are going to write the values in a particular format, in a particular style we are going to write. So this is the format over here. So as always, so we are going to start from gross total income, sorry, not gross total income, it's gross profit. So continuously we are doing good videos, right? So gross profit, so we are having gross profit valued at 98,000. This value is being bifurcated in the ratio of sales ratio, that is 1:6. So 98,000 into, I'll just write here, don't get confusions. Thousand into 1:6. So 98 into 1/7, it is 14,000 into 98 into 6/7 will be 84,000. Okay, next one more thing, we have one more income in the question, that is bad debts realized. If you have question in that they have clearly mentioned, it is full and full related to pre-incorporation, so that is why I'm going to write it only in pre-incorporation. So 14,500 and 84,000, this is the value. I'm going to consider this as total A. So this is the first one. Next, expenses. So one by one. Firstly we are having commission. Commission is valued as 2,625. If you want to add one more column means you can add it you can just simply uh, include an column in order to write the total, but for examination purpose you don't require that, because we are going to clearly mention every ratios here. No need to write the total value, but in order to give clear picture of the solution, that's why I'm writing here. So commission is also based on sales ratio, that is 1:6. So 2625 into 1 by 7, if you calculate, 375 will be the pre-incorporation value, and 2250 for post-incorporation. Next, advertisement. So advertisement valued at 5250, that is also on the sales ratio 1:6. So 5250 into 1 by 7, 750, and 5250 into 6 by 7, 4500. Next we are having MD's remuneration. So this is full and full related to post incorporations, so we can directly write it to post incorporation. Value is 9000. Next, depreciation. So depreciation is valued at 2800. In time ratio we are going to identify that. So time ratio is 1:3. So 2800 into 1 by 4, that is 700, and 2100 for post incorporation. Next, salaries. Exactly, salary is also related to time ratio 1:3. So total salary is 18,000. So 18,000 into 1 by 4, 4,500. Next, 13,500. Next, insurance. So insurance is also on the time ratio 1:3. So insurance value is 600. So 600 into 1 by 3, that is 150, and 450. Next, preliminary expenses. So preliminary expenses is related to fully post incorporation, so we are going to directly write 700 over there. Next, rent and taxes. So instead of writing rent, I'll use different color for rent. I'll write working note. So here also I'll just don't write anything, because we had different calculations, isn't it? So this value we are going to write it in the rent. How much? 600 and 2,250. Next, taxes. This is also working note. So how much we are having? 38 and 112. So 38 and 112 is the value. Next, we are having discount. discount is fully related to sales ratio 1:6. So total discount is 350. This 350 into 1/6, that is 1/7, sorry, 1/7 will be 50, and 300 for post incorporation. Next, last one, nothing but bad debts. Bad debts, you have to mention as working note or note, whatever, how you have given the heading. So this is the working note calculation what we have done. So this is related to the thing calculation of bad debts. We have identified this, and finally we know the value 386 and 864. So 386 and 864 as the value. Got it? So now we are going to calculate all the expenses. So one by one, from 375 to 386, we are going to add it. So if you add, that means the expenses will be, value will be 1549, and this one is 36,024. This what we are going to consider this one as a total B, isn't it? So this is the value what we got. Now we are going to identify the net profit. So how we are going to identify net profit? By A minus B. So one part, a pre-incorporation part, will be transferred to obviously capital reserve, and post incorporation will be transferred to P&L account, or we can write it as P&L appropriation account as well, no issues. Okay, so this is the question now. See how much total? 14,500. 14,500 minus 7,049 will be the value of 6,951, and if you minus 84,000 minus 36,024, the value will be 49,000. Just a second. Yes, I think this is 36. See, so writing 26, the value will be here 47,000. 47,974. Yes, so this is the thing. So we have to identify the net profit, and next what we are supposed to do, we have to transfer that net profit to the respective account. So in question itself they have given the net profit. how many of you identified, I don't know that. See here what they have given, 54,925. The same value should be there. So if you calculate how much profit we are having, 6,951 plus 47,974. The value will be, if you add this both values, means you will be getting 54,925. This one and this net profit is same. So here our solution is correct. We have not missed any of the adjustments, or we have very clear value. Got it? This is the solution for this question. Hope you all understood this concept, profit pure incorporation. In earlier videos we have solved very simple questions, isn't it? So we don't had any of these adjustments. Simply we'll be calculating only two working notes, that is time ratio and sales ratio, isn't it? But in these questions we have calculated revised time ratio, and next how we are going to identify rent if varies in values, means how we are going to identify that, and all we have learned in this problem, isn't it? Hope you all understood, and I think you have no doubt in this question. If you have any doubts, kindly comment in the comment section. I'll try to solve all of your doubts. Okay, thank you for watching. If you like this video, means kindly subscribe to my channel, like this video and share this with your friends. Thank you for watching.